Breaking news, new data's out. This data is going to shock you. And how will the RBA react? What's in store for interest rates? A month ago, everyone was expecting a rate cut in November. The big banks, the top economists, every major research firm was saying the same thing. But this new inflation data has changed everything. It's forced the RBA to completely rethink its decision. The RBA just dropped a massive bombshell, and it's going to crush the hopes of a lot of Aussie home buyers. New inflation data just came out, and it's not what anyone expected. Prices are up. Inflation has blown out. People are spending more. And now the RBA has made a shocking statement that's flipped every major bank forecast for rate cuts this year and maybe even next year. So if you were waiting for that Melbourne Cup Day rate cut or even a Christmas surprise, guys, don't. Stay with me because I'll show you exactly what the RBA said, what it means for your borrowing power, and why property prices won't be slowing down anytime soon. Let's start with what just happened. Inflation for the September quarter, that's July, August, and September, came in much hotter than anyone expected. Headline inflation jumped up 1.3%. That's massive. Just in that quarter, taking the annual rate up to 3.2% out of the target range. That's up from 2.1% in the previous quarter. And the RBA's favorite measure, the trimmed mean inflation, which filters out the wild price swings, also lifted 1% for the quarter. And that's now sitting at 3% year on year, up from 2.7% last quarter. That's the first time in almost 3 years that underlying inflation has actually started climbing again. Now, why does this matter? Because the RBA has one job: keep inflation between 2 and 3% and also keep our unemployment low. So when the data jumps like this, they can't justify cutting rates. In fact, they have to pause or risk pushing inflation right back up. Within hours, markets have flipped. ANZ, Westpac, CBA, even the independent economists, they all pulled their rate cut forecasts. ANZ said it straight: we no longer expect a rate cut in November. Oxford Economics called the data the final nail in the coffin for rate cuts. And Westpac's chief economist said even a February cut is far from certain. So no cut in November, probably no cut in December. But here's the twist: the property market doesn't seem to care. Because while rates are on hold, the property market is still moving fast. Fresh data from Cotality shows home values have climbed almost 1% in just the past month, the strongest pace since late 2023. Month after month, prices keep rising, even with no rate cuts. And Domain's latest quarterly report tells the exact same story. House prices across the capitals jumped 2.9% in the September quarter, the fastest growth in nearly 4 years. Units climbed even faster, up 2.3%, double the pace of last year. Why is this so? Because 3 rate cuts earlier this year already boosted borrowing power. Wages are up, confidence is back, and supply, it's still nowhere near enough. There are 15% fewer listings than normal across the combined capitals. So even without the new rate cuts, demand is still strong and the competition is extremely fierce. So if you're waiting for prices to cool, remember this: we've had no cuts for 3 months and prices just keep hitting record highs. Let's be honest, rate cuts are only part of the story. The real issue is supply. We're building fewer homes than at any time since 2014. We've got population growth near record highs. Rental vacancies are under 1% and approvals are trending down, not the right direction. And then, to make things worse, the government dropped the 5% deposit scheme last month. That's pulled even more buyers into an already hot market, mostly first-time buyers chasing the same few listings. So demand is higher, supply is tighter, and borrowing power hasn't dropped enough to slow it down. In short, rate cuts may be off the table, but the market's still burning. Now, could we see rate cuts next year? Probably. Most banks still expect 1 or 2 small cuts in 2026 once inflation cools off again. But let's be clear, even if that happens, it's going to add more fuel to an already raging fire in the property market. If RBA cuts next year, borrowing power goes up again and property prices will continue to grow. So don't think no cut means the boom is over. It just means the market's taking a breather before the next leg higher. That's why all the smart investors are getting in now. Check out these numbers. There are a record number of property investors in the market right at the moment. So no rate cut in November, no Christmas cut either. The market's still breaking records. That's the reality. Inflation's hotter, spending stronger, and supply is weaker. And that combination keeps pushing prices higher. Whether rates move or not, what do you think? Will the RBA finally cut early next year, or are we in for a long pause? Drop your thoughts in the comments below and tell me what you're seeing in your city right now. And guys, make sure to hit that subscribe button. This is your daily property update, your 3 to 6 minute update on the property market every single day, so you can be a property insider.